Good morning, folks. It's Monday morning, and if you know this equation, it is the Black-Scholes equation, an award-winning Nobel Prize winning equation that returns, if you know how to manipulate differential equations, which we will get to shortly. This is the American version. There's your standard deviation. Rho is your standard deviation. And you will see that this is from Wikipedia, open source. And pull it up yourself. You'll see that this equation, it is now Friday, May 16th. Pardon me, Sunday, May 16th, and the stock market is irrationally flying headlong into disaster. And all the mathematics right there and right there tell you that we are way past an impending 30 to 40% correction. This is a paper tiger. You folks have got to really understand that there's something grossly wrong, and that the bears are maniacal. And they're going to keep this guy going. And I know people have low attention spans nowadays and don't even know how to read differential equations. Pick up a mathematics book. It's just basic. You could really break this down into real simple terms. You know, if you trade in options, and you know about rho and delta and gamma. And these are very simple equations. You know how to divide two numbers. That's all you need to do. Now we'll take a look at... Let's go out on, let's take a look on this graph out. Let's just go 10 years for the fun of it. And hello, what? That happens to be SPY. It could be any other stock. Let's go max. Now, that big hump right there is May 2008, and had a nice nice run up, a nice 45-degree run up, and then after a period of time, it started to do a 30% downgrade. Then it had another one again. Now, do a little arithmetic. You don't even need mathematics, but just arithmetic to take a peek at this and look at what it's done. Just gross graph reading, and you'll see greens everywhere with a couple reds. Things are really not that good. We have a base of $56 million and several trillion out. That's not going to hold it. We're on the verge. We're on the cusp. Let's take a look at it in the past couple days and see what it's done. These folks are really, these are moving averages, and let's just change the time frame of it, shall we? Let's look at the last 10 days. Here's your volume on the bottom scale, moving averages, MCAD, MACD they call it, volume, up and down, red all the way. This is the past 10 days, very choppy. And all of a sudden, 2 days ago, they decided, let's keep it up and up and up. Even after the Fed has said, we're going to announce we're going to raise interest rates. They've already stated it publicly, and sooner than people think. But they're going to go right ahead anyway and keep this guy bumped up every day. Bumped up. And spiking and just bump right back up, big gigantic swings, unprecedented rise-ups, hardly any profit taking. PEs, even if you calculate the general PE for SPY, over the top. Depression level PEs and debt to asset PEs. And we're on the verge of crashing. We're on the verge of crashing. This happens to be SPY. Let's take a look at, I don't know, some other index. Same thing. QQQ, which is the NASDAQ composite. They did the same thing. They even did a little bump somebody out of the way. They just kept it right up, even in spite of the fact that it's been foundering, and for good reason too, that the Fed is very soon going to well, let's get back to Black-Scholes here. I don't mean to be boring everybody with it, but it's very absolutely essential that you folks know this. This is the holy grail of equations. If you could just learn some simple arithmetic, real simple arithmetic. Everybody knows what a square root is. This is your standard deviation plugged into a differential equation. D1 equals 1 over. Very inverted. For if you took this, if you don't know this, you shouldn't be in the stock market at all. That's all there is to it, or you might as well just go on down to Las Vegas, enjoy yourself, and then at least you can get a buffet. What the heck, or whatever else you fancy. But this is hard mathematics, and love it or leave it. And the market is probably, I wouldn't doubt it. The bears are thinking maybe Monday morning. We had a big uptick there. Sorry, folks. I want to focus that in. This is supposed to automatically focus. Oh, that's QQQ. Let's go back to SPY. I watched that carefully Friday. And the guy's not going to focus for me. Sorry, folks. There, let's look at it over 2 days, and you can see the, and over a period of 1 minute. And you'll see that they spiked real high, which often is preceded by the next day. Say Monday is the next day. Come on, focus, baby. Sorry, folks. See, it popped really good. Real high buy volume. And massive volume on the SPY, which also equates to the Dow Jones and the NASDAQ and all other major American markets. If you look at the foreign exchanges, they did the inverse of what we're doing because they're realizing that, you see it spiked right there. And let's see if we can get close in on it. Refocus. Not gonna, sorry folks. Let's see if I can get you a little picture of that. Sorry folks, this isn't the most riveting. Anyway, come Monday, it will be announced. It is on good information that the Feds are probably going to announce a much sooner interest rate hike than anticipated, and even and it is known that even the stock market will correct even with the Fed announcing a interest rate hike 6 months in advance. But this is coming much sooner, and people should probably be braced for it. They don't seem to be. They seem to be just acting business as usual, like they did in 1929 and like they did in the 70s and 2008. Everything's just hunky-dory, and they're going to take the last penny they can. Very bad thinking. And I wouldn't want to see people just absolutely lose their shirt. So there you are, folks. Again, Tina Jahody. I hope I've enlightened you a bit, and I hope you folks study the Black-Scholes equation and just brace your hat. This stock market is going to crash before it pops. Sorry, folks. I'd like to see it continue up too, but that's just reality. Black-Scholes equation is the holy grail of equations for options and stock prices, and they didn't win a Nobel Prize for nothing. They knew what they were doing. Folks need to be paying attention to that.